Hey, how's it going, guys? This is Kyle from InvestiShare. We're going to be going over really quickly yesterday's trade scenario and how that played out pretty well, actually. We had some barriers that we were watching, and we got to those barriers, and we decided to get out. Even those who didn't get out actually still had their target met without their stop loss being hit. So let's dive into the charts. I'm going to show you what I'm looking at. We have two scenarios that we're going to be preparing for, and one might be happening unfortunately before you guys are able to watch this video, just because it looks like it's going to take about half an hour to 45 minutes. And HD is awesome, but it takes a little while for it to render, so I'm sorry about that. So we're going to prepare for two scenarios: the loss of support and Confluence with the loss of the 4-hour support level, or we could break out of this falling wedge structure that's squeezing the price action again for a potential pump to the upside with a much, much better target, because it's going to come in Confluence with some daily price action behavior, which is perfect timing because I know someone just commented that we want me to go over some of the daily stuff. So let's go into the charts and I'll show you what I'm looking at. So let's zoom in a bit because there's a lot going on here. So if we go back to the past from yesterday's move, and I'm going to move this as well. There we go. Okay, cool. So we've got this valley area that we've been watching ever since we've got, this level of resistance and support here and support here. So we got these three touch points that allow us to have a more dependable value area. And ever since then, we've been pulling and updating it until eventually we lost the area of the valley area right here when we had price action come down and create a new lower low. The confluence that I was looking for when I wanted to enter here was the loss of these full body support that we were building. Where this orange dotted line is, you can see that if we zoom in a bit, we've got a full body candle here honoring a support, full body here. We have some wicks here, and we go back in the past, we can see that it started around here, right? And a little bit of buy pressure here. But anyways, going over here, this was the candle that was the deciding factor for the short. When we broke all that support in Confluence with the value area low acting as resistance, our initial stop loss started off over here, using this structure as our guard, because when you're putting your stop loss in place, you need to find something that could protect your capital. And the confluence that we had for protecting your capital was the value area low and the structure. And the structure always trumps everything, so look for the structure. So we started with our stop loss there, entered around this zone, and we targeted the 4-hour downtrending level of resistance that could have had opportunity to act as support, just like it did right here. So we were watching that and the fact that we were at our 4-hour structural value area low here. And when we came down pretty, with a lot of volume, came down pretty hard, and we had some price action crunching here. Whenever you see something like this and it's hard for you to make up what it means, obviously it's support. But what you should do is you should see how the support is behaving in the lower time frames during a situation like that. If you can't make heads or tails of what's going on, just go into the lower time frames. For me, I like going into the 5. And I could see that we started building a double bottom warning. A warning for those who are in shorts to prepare to potentially get out. So we had that double bottom coming off of the structural value low, and either way, yeah, so you could have gotten out during that warning because we didn't have the benefit of hindsight. Obviously, we didn't know all this was going to happen. So once that closed, you could prepare to get out. However, if you stayed in, you had an opportunity to have your target basically hit here. And even if you stayed in after the fact, when we came all the way up, before we lost this uptrending momentum, that it came down, it would hit your target. So anyone who was falling asleep and they set their limit orders, they were happy because they made money either way. Now, this is the current price section that we got to look out for. So now we got out of this value area and we created a support level, resistance, and support. We had a more dependable value area pull that we can use for the fixed range. and we can start using it for our trades. And we had a short opportunity here for anyone who took that. We got uptrending momentum and a swing failure pattern, and yeah, acceptance stayed in the value area, and you would target the value area low. And now we're doing something similar. So let's go back to the 15. We have a potential window. It's about 45 minutes for it to potentially fail or to break out of the falling wedge structure here. In the falling wedge formations, the target is usually the top of the formation. However, you have to use the data that you have to help give you limitations. So I would be targeting this window right here, where we have the full body resistance and the previous value area high here. So at 64,170 is a critical area to watch, but along the way up, we need to watch for the immediate threat, which is the previous value area low, and the point of control. So these are areas where you should set alarms to see what kind of price action you get during those areas. So if you end up getting like a double top and it breaks, that could warn you to get out, just like how this double bottom could have warned you to get out during that short position. Now that's the bullish case scenario, and that bullish case scenario could happen, in the next hour and a half, or like when we come up and have the value area high act as form of support, because we're likely going to get pushed back down from this level where we had all this support in the past. It gives it the opportunity to act as resistance, just like it did right here. So if price action comes up, it could push us down. So be patient and wait for the higher high close and use that as your stop loss guard. And if we end up coming down instead and we lose this momentum, then we can prepare for either a new setup down here, or B, the bearish setup, where if price action comes down and we lose this 4-hour support level, and in confluence with that, we break this, we have it act as resistance, then we could be targeting these lower levels around 60,975. And yesterday, at the time of this drop, the liquidity that we were cautious about being hunted for was, a lot of it was scared out of the market. Over 30% of the liquidity was scared out. So people decided to take profits basically on their longs. That most of them started right here. So a lot of people entered along here. And how I know that is because of the liquidation heat maps, right? We have this chart. This is the weekly heat map for Binance. And you can look at all the other exchanges too on this tool. And we can see that right during that moment, there was a large amount of liquidity that entered the market. So about $400 million entered, and more entered over time. But you can't see it on your screen. But on my screen, if I move my mouse to the left and the right here, I can see that we dropped just on Binance alone from $457 million worth of liquidity down to 381. And that's just on Binance. So that scared people out. Either A, it scared people out, or B, they had their stop loss resting below this structural support zone, and they just, when they got stopped out, that's their way of taking profits, and that they're hoping for a new high so they can move their stop loss higher and higher and higher. So there's two ways people can exit the market. Like, liquidity can leave the market. If people are taking profits, you can watch it for it that way, and then they become less of a threat in the future. That's why I never really understand why some, no offense guys, but some YouTubers will post crazy wild bearish targets based on liquidity that's down below, and they don't realize that it could be, they can exit the market way before we even get to those levels. So just watch out for watch for updates in the heat maps and see how it reacts to certain levels of support or resistance breaking. And you'll be surprised how people are able to exit, and it gives you an idea of where people are putting their stop losses, and you can learn from it. But anyways, that's what we're preparing for: the bullish case scenario from the rising wedge, or the bearish case scenario for losing this downtrending momentum. But on the daily, this is why this is important on the daily. If we go to the 4 hour, or let's go to the 4 hour, because you can dissect it a little bit better. We are building a bullish formation off of another bullish break. So it's looking like it's trying to build a continuation structure off of the downtrending resistance. And this is going to be a way of confirming. I call this confirmation formations. So whenever you see a formation being built, a smaller one being built off of a level that was broken, it kind of gives you an idea that we're likely going to continue to go up. And a lot of longer term time frame traders are going to enter their longs up here when we get the higher high on like the 4 hour, for example. And then they'll use this as their stop loss and this as their target. By being able to dissect it on the 15-minute time frame like we just did, we're going to be able to potentially front run that and get an entry early down here, have our stop loss here instead, and giving us a much, much better risk to reward ratio. Or like this might not have been a good example for a stop loss. You could actually have it much tighter than that depending on the confirmation bounce that we get. But either way, guys, we're having a lot of bullish confluence right now, but it doesn't mean we don't prepare for the bearish scenario. But this is really good. This is what we want to have in order for us to reach these high levels again around 70,000. But along the way up, we want to watch the 4 hour value area point of control at 67, because this is going to be a really key area that we're going to have to break past. So we can expect price action behavior like this. We come up, act as a resistance, maybe come back down, have this previous high act as support, and then create a new high for a continuation. And we get like a trend like that. I'm not going to pretend I can see the future, but that's the kind of pathing that you could expect based on the value area structure that we've got. But that's pretty much it, guys. If you have any questions about this, of course, you can reach out to me in the Discord. And you have yourself an amazing day. Thank you. Bye.
Hey, yo, I'm all about the crypto. In case you don't know, it's the haste of inflation, the crazy sweep on the nation. No baby, every blockchain ain't created the same, but the learning curve feels like a bullet to the brain. Let me enlighten you. Let me enlighten you. React to the max that would turn to a fire.